everyone, welcome to Cheongfuli Weekly Report. Here we bring you the latest China's steel market prices and analysis every week. This week, the spot price of steel further declined, with the domestic spot price of hot-rolled coils dropping by 30 yuan per ton and the price of rebar falling by 20 yuan per ton. From a macro perspective, Sino-US frictions have intensified, and the long-arm jurisdiction over China's rare earth exports and US tariffs on China remain key topics of discussion. However, the specific implementation dates of policies from both sides are after November, so there may still be room for mitigation in these policies, and further observation is needed on the negotiations between Chinese and US leaders at the Asia-Pacific Economic Cooperation (APEC) meeting in South Korea at the end of this month. Domestically, the communiqué of the 4th plenary session and the 15th five-year plan proposals will be gradually released starting next week, and it was reported at the end of October that relevant stimulus policies will boost the economy in the fourth quarter. Overall, the current overseas macro environment is relatively bearish, while domestic policies mainly serve as a hedge. On the industrial side, the weekly output of the 5 major steel products decreased by 63,600 tons, and the daily molten iron output this week remained slightly reduced at 240,950 tons. Specifically, the output of hot-rolled coils decreased by 14,500 tons week on week, and the output of rebar dropped by 22,400 tons week on week. Steel mills' profits have declined significantly recently, so it is expected that output will further decrease in the next phase. Especially after the reduction in scrap steel, there may be a further drop in molten iron output. On the demand side, this week's demand increased by 1,399,600 tons compared with last week, and demand has recovered significantly compared with the National Day holiday week. But the inventory situation is actually not optimistic. The market's main focus remains on the speed of demand recovery and the judgment of the upper limit of demand. In terms of inventory, the 5 major steel products returned to destocking, with an overall weekly destocking of 184,600 tons, and both social inventory and mill inventory decreased to a certain extent. By product type, rebar inventory decreased by 185,900 tons, while hot-rolled coil inventory faced pressure and increased by 62,900 tons overall due to production transfer. In summary, steel demand recovered in the second week after the National Day holiday, but due to the further decline in steel mills' profits, the transfer of molten iron has caused supply-demand pressure even on products that previously had good profits, especially coil products. Given the current maintenance of high molten iron output, raw material prices remain relatively firm. But as steel mills' profits further decline, the pressure of price drops will be further transmitted to raw materials. Therefore, before output declines to ease the overall inventory pressure, even if the prices of raw materials such as coking coal and coke are relatively firm, they will hardly withstand the price decline driven by weak demand. And the upside space for steel prices is also limited. In addition, as the profits of special steel have dropped to a very low level or even reached the break-even point, molten iron is being shifted to the production of general-purpose steel, so we can instead pay attention to cost-effective products such as special steel and section steel. For procurement, it is only recommended to purchase based on rigid demand and focus on high-quality resources with good cost performance. From the institutional perspective, macroscopically, the recent escalation of tariff disputes has put pressure on bulk commodities. Meanwhile, the steel industry chain is experiencing a sluggish peak season, which may require a further compression of steel profit margins. Given the recent release of the 15th five-year plan, there might be opportunities for a rebound in steel prices. To sum up, a cautious approach should be adopted towards steel prices in the near term. For product types, consideration can be given to steel varieties with increased cost-effectiveness, such as special steel and section steel. Currently, after the decline in billet prices, partial procurement can also be considered. Okay, feel free to leave your thoughts, questions, or any related inquiries in the comment box below. And if you found this video valuable, don't forget to follow us for more updates. See you next week.